Last we spoke to her, toxic assets were still preventing bank lending. Elizabeth Warren, chairwoman of the Congressional Oversight Committee for the U.S. TARP program, joins us now to discuss bank regulation and the continued goals of the Congressional Oversight panel. Professor Warren, welcome to Bloomberg News. Good to see you.
Thank you. It's good to see you.
Last month, Neil Borofsky, he's the TARP's program special inspector general, he told the Senate Banking Committee that he doubts taxpayers are going to get a full refund of that $700 billion in bailout. Do you agree with that assessment?
Well, he's probably right, but let's remember, we're in the market right now, like it or not. We've gotten a good return on the first ones coming out, paying back their TARP money. But we own shares of stock in large financial institutions and in 2 auto companies. If those do well, we could make our money and then some. If they don't, then no, we're not going to get it all back.
What are your thoughts on regulatory reform? You've often spoke of how the long-term impact of the TARP on the economy will increase the risk of moral hazard. So is the administration, in your view, on the right track?
I think they're on the right track. I think we need a really tough response on regulatory reform. The single biggest thing that has to come out of this crisis is an understanding that the rules that got us here cannot be the rules that take us forward. If they are, then we're going to move into an every 10 to 15 year boom and bust cycle that's going to be really great on the upswing and really painful on the downswing.
Yet some critics have suggested that since the crisis was a once-in-a-generation event, that maybe the regulation really isn't needed.
You know, it's a once-in-a-generation event because for 50 years following the Great Depression, we had good regulations in place that gave us both prosperity and security. We began to pull those regulatory threads out. We permitted a lot of new changes without regulating the new parts of the market that emerged, and we ended up in this kind of crisis. Now, if we don't have adequate regulation, we really will go back to busts that are going to look just like this.
Professor Warren, are small banks still in trouble? Are the toxic assets on their books at this point almost crippling them?
We are very worried about the small banks. It's the toxic assets, the mortgage loans that first got us into this, but also the small banks disproportionately hold commercial mortgages.
Right.
And the commercial mortgages are not looking good. As you know, they had a longer reset. That is, unlike the mortgages, which had to be reset, most of them in 2 to 3 years, they're on 5 to 7 year cycles. So we're going to see the big numbers on the resets there in 2011, 2012, 2013.
Are they going to need another infusion of cash to survive? And where's that money going to come from?
You know, I think the answer may be here. If the most recent history is any guidance, they may not get cash. Many of them may fail.
Your panel's report last week showed more than 50% of homeowners are redefaulting even under the Treasury's plan. So any thoughts on a solution, or what are your discussions among your panel like?
Yeah, we are very worried that we are not approaching the mortgage foreclosure crisis with a permanent solution, but instead may, to a significant extent, be spending a lot of money just to kick that can on down the road.
So this is a Band-Aid to cancer approach right now?
That's what we're worried about. We think it has some good features. We think that trying to move to affordability on the mortgages makes a lot of sense.
But a long-term solution is what's needed, right?
And that's really where we want to put the major emphasis. You know, we are now creating, for the first time in our history, a new set of mortgages that will have 125% loan-to-value ratios. We have no experience with whether or not people will actually continue to pay those over time.
Okay. Elizabeth Warren, chairwoman of the